All right, it's 12, so I think we can start now. So, at the beginning, we are Polish community, and we like to talk with different projects because, get insight from big brains from this industry. It's what we like to hear. So that's why we welcome you, and we want to talk about Pendle Finance and about your experience there. So maybe at the beginning, can you tell us a little bit more about yourself? What is your experience? What is your position in this project?
Yeah, sure. First of all, thank you for having me. I am Tien, the CEO, co-founder of Pendle, and my experience in crypto stretches all the way back to 2016, 2015, 2016 period, actually. Back then, I was mostly doing research around different types of business model that exists in the fintech sector. And I came across a business model that was very intriguing, and it utilizes Bitcoin for remittance between Singapore and the Philippines. So, looking across all the different types of remittance businesses, I figured that most other companies like Wise and equivalent, right? They were improvements on a business model front, but the company that I was interested in, Toast, it's utilizing Bitcoin, and its mechanics were just different altogether. So from a technological standpoint, there was true innovation. So that was the start of my interaction with crypto. So over time, I became more involved in the space and started to look into different types of cryptocurrencies. And in 2016, I think one of the more talked about coins was Ether. So what to like back then I wasn't as technical, and I wanted to get involved in a very technical space. So one of the things that I did to allow myself a way to penetrate the ecosystem was to organize Facebook communities to learn about Ethereum. So I co-founded a Facebook community called Ethereum Singapore, and from there on got to know more people. And yeah, back in 2017, I joined Kyber as a founding team member and had a really wonderful experience working at Kyber. And then subsequently, I left the team in 2019. So from there on, I gathered a group of people who are still working with me on Pendle, and we experimented with different ideas ranging from mining, privacy coins, to building DevOps solutions and ETL pipelines for the different types of layer ones. So collectively, over the course of two years or so, we've had exposure into the different sectors within crypto, and that was all before Pendle. So to go a little more into how Pendle came about, yeah, just my friends, my co-founders, and I, we were farming different shitcoins in the DeFi summer period. So we noticed that all the shitcoins, they were offering maybe 10, 20,000% in APY. And there was no way that we could very properly lock in the rates. So, and when we reference the state of DeFi to a conventional financial sector, we recognize that fixed rate products were actually one of the more important components in the financial sector, and that was largely missing in the crypto space. So that was the motivation for us to go deeper into this problem statement. And from there on, we started to look into ways to enable the solution for this problem statement. And that was when we worked on the splitting of a yield-bearing asset into principal token and yield token, and allow these two parts to be traded independently.
All right, that's nice. So you are quite experience on this market, on this industry. That's good to hear, really. So yeah, you talk a little bit about what is Pendle about splitting this principal token and yield token. Can you get us a little bit more insight how this protocol works?
Yes. So effectively, Pendle is a yield trading protocol, and the mechanics of it is it involves an AMM, and it also involves the tokenization of a yield-bearing asset and splitting it into principal token and yield token. So the principal token is operating like a zero coupon bond, while the yield token functions as the coupon that accrues the yield that is paid out from the underlying protocol. Now, I guess without going into the details and the nitty-gritty of this, what this mechanics enable, right, is for users to, if they want a long yield, that means if they are optimistic about the outlook of a certain APY position, they can buy the YT, or they can sell the principal token. And conversely, if they have a relatively pessimistic outlook of a certain APY position, then they can do the opposite. So fundamentally, what I think we enable is a way for people to express their views on some of these APYs and positions.
What do you think that people are using your platform more for getting this cheap principal token, like for example Ethereum without this yield, or this is more usable for just longing and shorting just yields?
So I think actually I would look at our protocol and have like maybe 3 different buckets of users. So at the high level, right, maybe to most people, they don't want to trade the YT or PT, but there is a way for users to participate in the protocol by providing liquidity. So this is the first group of users. Now, in terms of the liquidity provision, it's actually pretty, the way we structure the AMM is so that the liquidity provision is relatively straightforward, and the impermanent loss is quite minimal. And if they hold the position until expiry, there's actually no impermanent loss. So this is the first group of user. Now, for the PT trades and YT trades, these usually, the users of this group are usually more sophisticated. And so for PT, because PT function like a zero coupon bond, so when, let's say, the discount is hefty, users, it makes more sense for users to purchase the PT token of the asset of choice. So as an example, right, we have STETH market on Pendle, and if the discount for STETH is attractive, then it would make sense for the user to buy the discounted STETH, hold it until maturity, and redeem for the underlying STETH 1-to-1. So what this is that I think it offers a very, like it's a good opportunity for users to get some like discounted exposure without having to trade as aggressively. Comparatively for the yield trading side of things, it usually involves some sort of strategy formation, and you have to take a view on the direction of the yield. So for YT trades specifically, I think, as we've talked about previously, right, users can express their view if they feel more strongly about the APY of, let's say, STETH. They think that the STETH will offer 10% APY after Shanghai fork, for example. Then maybe the way to do it is to buy the YT, right? If they don't think that the APY is going to sustain after Shanghai fork, then they should sell YT. So this is what we think the product enables, and this is how we're seeing users utilizing the product for.
All right, gotcha. But let's see some examples. Now, when we go to your website, there is like simple version and pro version. Simple version is, as the name says, really simple and quite different than pro version. But when we go to Arbitrum and pro version, there is like GDI. We can see underlying APY, implied APY, and also long yield APY. And there is for this yield token 130%, and for principal token just 10%. So how does where is that 130% come from?
Sorry, could you repeat the market? I'm looking at the UI right now.
Yeah, it's Arbitrum and the markets and the GDI token, and there is like a yield token 130% APY. Where it comes from?
Right. Okay. So this one here, because it says in the UI, the APY is as high as 123%, and this one here comes from liquidity provision. So on the UI, there's actually two numbers for every row. There's a base APY and there's boosted APY. So for the GDI pool specifically, right, the base APY is 66%, while the boosted APY is 123%. Now, by providing liquidity into the protocol, there's actually 4 different sources of yield that a liquidity provider is entitled to. One, the yield, the makeup of the 66% base APY is in the form of the incentive that is paid out from the underlying protocol, gains like GNS token. And then secondly, the incentive from Pendle, so Pendle token. And then third, it's the PT part in a liquidity pool that appreciates with time, that makes up part of the 66% APY. And lastly, it's the swap fee within the pool. So that means, because this is an LP pool within an AMM, any trade that happens, a portion of that would be accrued to the APY, right? So because of that, the way we structure the AMM is so that it makes a lot of sense for existing, let's say, GDI or GLP or STETH holders to put money or put their assets into the pool, because they don't lose out the rewards from the underlying protocol, and at the same time they're able to increase the yield exposure for their existing assets. So that's the 66%. Now, the 123% APY is a result of boosting. So because with Pendle V2, one of the more important features that we've introduced is VE Pendle. Now, VE Pendle is inspired by VE Curve, and structurally there are a lot of similarities. So when you deposit Pendle and lock it up for a period of between 1 week and 2 years, you are entitled to VE Pendle. And if you have more VE Pendle, then the amount of booster that you are entitled to increases as well, up to 2.5 times the base APY. So this is why when you see the base APY, it is roughly, like when you see the boosted APY, 123%, right? It's roughly 2 times that of the base APY because of the boosted multiplier from VE Pendle.
All right, that makes it more clear for sure. That's really nice. So for now, you don't have many assets there on your platform on both chain. So the question is how you pick your partners, and what's next coming to your platform from other project.
Yeah, so in terms of the asset, right, we have the way we usually shortlist the asset is by looking at the fit with our narrative. So in this case, I think we wanted to prioritize assets for that are part of the LSD narrative. So we started out with STETH from Lido, and then we also looked into RETH, and we had co-announcements with Balancer, Aura, and Rocket Pool back in January. And then following that, we also supported like newer STETH assets like Rep ST ETH markets listed on Aura. So, and then most recently, just yesterday evening, we announced Anchor ETH. So what we want to do with this is like, we want to see alignment between the assets and our focus, which is LSD at the moment. And then the other focus that we have is on Arbitrum. So just the start of the month, on the 1st of March, we launched on Arbitrum and we supported GLP market. And then a week after, we launched the GDI market. So yeah, moving forward, whenever there are interesting assets for us to support, we will try to bucket them into the two focuses that we have, and then we see if it makes sense. Now, that aside, so from a narrative standpoint, that's kind of how we shortlist. And then from there on, we would also evaluate just the popularity of the asset and also the reliability of the contracts. So that means the materials like contract audit of the contracts, that would be certainly something of a consideration. And then the liquidity of the asset. So as an example, right, if we support an asset with only 200K in liquidity, that wouldn't make a lot of sense because if the pool of the asset is only 200K, then the chances of conversion into Pendle is going to be less than 200K, maybe 20K or 30K, and that's not going to be very material to our protocol. So we would prioritize less of that and really focus more on assets that have deep liquidity. And of course, just reputation, because if we support an asset that has a large community base, that would also have a lot of useful impact on our protocol as well. So case in point is our announcement with Rocket Pool, Aura, and Balancer. Collectively, there are three other protocols that we're working with, and we are able to tap into their communities. That gave us a lot more visibility and eyeballs. So that was also a very important consideration when it comes to deciding the asset of listing.
All right. That seems nice. So maybe let's change a little bit of topic and tell us, how big is your team, Pendle Finance team?
Yes, so Pendle currently has 22 people, including the part-timers and moderators. So our team is, very highly, at a very high level, segmented into three different teams. So we have a product team, we have a growth team, and we have an engineering team. So engineering team is largely the ones that are executing the contracts and front end and back end, making sure that the product is not just a vision. The product is actually a reality. So a lot of that is a result of the work that the engineering teams put in. And then of course there's growth. So a lot of these efforts that you're seeing today, reaching out to foreign partnerships, working with influencers, these are all the efforts from growth team. And then product is, product is a very, very important team within Pendle, because product decides on the high level strategy and the general direction that we're undertaking.
Gotcha. So going forward, I want to ask you if they're part of the fees of the revenues from the platform goes to some kind of treasury that pays all the expenses, or the only revenue that you have for paying salaries and for everything is selling team tokens.
So at the moment, we for the expenses, right? We are still tapping onto the funds that we've raised from investors. So for those of you who might not have followed Pendle, so Pendle actually did a fundraise back in 2021, and we raised from Mechanism Capital, Crypto.com, Spartan, CMS, Hashkey, Lemniscap, and a couple of others. And then following that, we also had a public liquidity event on Balancer in April 2021. So from there on, we have sufficient treasury, and at the moment, we're still tapping onto the funds that we've raised previously. Now, so Pendle is generating revenue, and in terms of revenue, we're starting to see bigger amount that's collected from trading activities as a result of increasing trading volume over the last couple of weeks. So, of course, over time, we hope to be able to have the revenue fully, yeah, like the revenue should be able to cover our expenses. So we don't have to resort to selling our tokens in order to pay for expenditure.
All right, that's good news. I think because a lot of the time we ask this question because there is many projects that they don't know how they will come with the money to cover all the expenses after their token is gone. So that's good to hear. And about trading volume on your platform, I saw a tweet from on your website, on the Twitter, on your profile, that on the Pendle Finance so why do you think this the PEC event on USDC caused the highest volume on your platform?
Yeah, so I think with what happened, just a context, over the last week, we actually had like 4 days with more than $1 million in trading volume. And as of yesterday, we had so I published yesterday that we had an all-time high of close to $2 million in trading volume for a 24-hour period. So I think the trigger of it was, of course, like with our platform, because it's an interest rate derivative, whenever there's volatility, the desire to trade would actually increase, because now with uncertainties, then it makes more sense for a certain group of people to either hedge a position or speculate on the yield. So when the USDC depegged, for one, we had a Frex USDC pool. A group of people wanted to remove their liquidity from the protocol so that they can exit their USDC position. So that contributed to some movement and activity in our protocol. And then secondly, some people wanted to take advantage of it because they have a different outlook compared to some people who wanted to short the currency. So with that, they don't actually have to, with our protocol, right? The users who wanted to long, they don't have to have the USDC position, and they can still achieve a desired outcome in trying to get the yield exposure. So that was what we observed. And I think these uncertainties resulted in higher traffic on the platform. But having that said, when things settle down, we're also seeing more organic activities that are somewhat independent of market volatility, because now people are starting to learn about the yield opportunities on Pendle. Like, for one, a result of our educational materials, the sharing of these materials, and also having people actively sharing about yield opportunities in Pendle. And I think people are starting to take a keen interest in seeing opportunities on Pendle and be more active as a trader on the protocol.
A few days ago, I saw some kind of tweet that there was a dude who managed to get like really crazy APY on GLP on your platform. I don't know, there was like a few thousand, something like that, that he had like 5,000 GLP tokens, and he managed to do in 1 week or a few days 500 more extra. So do you know some kind of strategy that can be useful to use on Pendle, or this was just like one time thing and the guy's is small genius?
So I think what the thread shared was actually a pretty simple opportunity, because so there were different parts to it. I think the details of it is posted in the chat of this stage. So if you're interested, you can look into it. And then there's a second thread that extends the strategy. So for one, of course, like there were some pretty interesting and juicy yield opportunities on Pendle. Secondly, it was also that the timing was good and he was lucky, right? So with trading, I think like luck is definitely a big part of the gains. So yeah, but this person, he's actually part of the team. What he was trying to do here is to showcase the yield opportunity in Pendle. And he wanted to just help users understand that if you follow certain strategies or identify certain patterns on the platform dashboard, there are yield opportunities that you can capitalize on quite easily and make an outsized return.
Yeah, so that was a really good move. So he can be proud. Yeah, that was really nice for his wallet. So now maybe let's jump to the tokenomics and the Pendle token. So can you tell us what is the usage of the token, and do you really even need the token to operate?
So the token with V2 launch, we've introduced like the VE Pendle component. Now, how VE Pendle works is by locking Pendle into a VE contract for a duration of time. So the duration is in between 1 week to 2 years. And the longer you lock up, the higher the balance of VE Pendle you have. So VE Pendle actually has 3 functionalities. One, VE Pendle function as a booster of yield. So we talked about the base APY and boosted APY earlier part of the discussion, right? And for GDAI, currently the base APY is 66% and then boosted APY is 123%. So with this is only possible with VE Pendle. And if you have higher amount of VE Pendle in your balance, then you are likely entitled to higher amount of boost up to 2.5 times the base APY. So this is the first functionality. Second functionality of the VE Pendle is to vote for incentives to be distributed to the pool of choice. Now, as a VE Pendle holder myself, I can decide how the incentive gets channeled to the different pools. Because every week, the protocol might have, let's say, $100 of budget, and there are 5 different pools. So what I want to do is to vote for the incentive to be channeled to the pool that I have exposure in, so that I get to benefit more from it. Now, what I will do is I will use my VE Pendle to vote for the incentives to be channeled to my pool, so that my APY continues to stay attractive and other people get less of it if they don't vote. So that's the second functionality, and that is to allow for the VE Pendle holders a right to vote for incentive channeling. And thirdly, in order to align interests between the voters and the protocol, the VE Pendle token also function as a means for the holders to collect fees. So the protocol actually collects fees in the form of swap fees and also the YT yield. So this will actually go into a treasury and be distributed to VE Pendle holders.
In which token do you distribute this rewards? Is that a real yield in stable coins or maybe in Ether?
It's going to be in USDC. So yes, it's a real yield narrative that we're driving.
Okay, that's really nice to hear. So for now, I think that circulating supply is 145 million. So you get like most of the tokens already released, and your hard cap is 200. Sorry, maximum amount of Pendle token is 235. So mostly now are just incentives and ecosystem found, or where this inflation comes from?
So the token inflation will continue. I mean, will come from the liquidity incentive. So on a weekly basis, there will be some unlock, and these unlock is a budget that we can spend to incent liquidity providers to deposit funds into the protocol. So in regards to this, the amount will continue to decrease on a 1% on a weekly basis for the first 5 years since the protocol launch. So we are about 2 years mark. So we have 3 more years to go. It will continue to decrease. And then in the first week of 6 years, we will assume a terminal inflation of 2%. So this is the current setup. But with time and when we extend our governance proposal, then this is something that the community can vote to either resume or change.
All right, so almost like team tokens were vested already. Yes, that is done.
Yeah, so for the team token, actually, the last vesting is next month, April. So there's 12.5% more vesting to be done. For investors and advisors, they are already fully vested as of April last year.
Okay, and what is ecosystem fund? Where those tokens can go to?
So ecosystem fund, the high level thinking around it is almost like a marketing budget. And because from a protocol standpoint, there are a lot of things that we can do to grow our presence and visibility across different media outlets, for example. And in order for us to align interests with those who can help us bring the protocol to the next level, the token is actually a very good way for us to align interests. And this is largely the primary use of the token. So to grow the ecosystem. Secondly, because we are building, I like to think that we're building a primitive, and there are definitely protocols that can be built on top of Pendle. In order to incent developers to build maybe strategy vaults or liquid lockers on top of Pendle, we can also tap onto the ecosystem fund to encourage development on top of Pendle.
All right, so what is your marketing strategy? I think that now you're gaining traction. A lot of people are tweeting about you. You have your 5 minutes of fame now. I think it will go even up in the future. So what's your marketing strategy? Do you want to maybe put some ads on YouTube channels for this big channels like, I don't know, Crypto Banter, or is it gonna be some kind of rewards, maybe some challenges for the community?
Yeah, so in terms of the strategy to continue growing our protocol, I think we can largely look into it from 2 different perspectives. So I would basically categorize the approach in 2 buckets, right? One is to focus on fundamentals, basically raising the metrics and TVL and trading volume on the protocol. And then secondly, it's with regards to the narrative. So one part fundamentals, the other part is about narrative. So for the fundamentals, right, the approach is going to be very different from the approach to increase the propagation of the narrative. So for fundamentals, again, we are going to focus on the performance of the protocol to make us as profitable as possible. And that will have to ultimately, that is ultimately quite dependent on the trading volume that we can attract on the platform and TVL as well, because our revenue sources come from the trading volume swap fees and the YT token, part of the YT token. So here, our approach is primarily, number 1, education. So the sharing the alpha threads to write about high APY yield opportunities on Pendle. That is one of such approach. And then one of such approaches. And then secondly, really reaching out directly to our target audience and help them understand about yield opportunities. For example, let's say if we identify a hedge fund with on-chain trading exposure, we can share about yield opportunities in Pendle and help them learn about the mechanics of Pendle. So this has been quite effective for us, and we will continue to invest our resources in the education front and also customer discovery aspect. Now, on the narrative front, I think narrative front is probably something most of us can relate to, and that is seeing other people write or talk about Pendle on social media outlets, not just on Twitter, but also on other outlets like TikTok or Instagram or YouTube. So for this, what we will be focusing on is to, first of all, have a very clear idea of how to convey the product and the proposition. And then from there, engage the relevant parties to help us with the messaging, right? For again, as an example, on Twitter, we're starting to see more organic mentions about Pendle. And a lot of times these are threaders or influencers who are just taking a keen interest in the protocol. And how that happened was because in the earlier part of the days, we have a set of materials that we've written, and then we try to condense the idea to simple phrases like buying asset at a discount or fixed rate, and then we reach out to the influencers that we respect and admire and share our ideas and vision with them. So for those who picked up, they wrote about us and share with their communities, and from there on we leverage on their network to compound the reach. So broadly speaking, I'd say like this is our high level idea in approaching the growth side of things. We're not a fan of spending too aggressively in trying to acquiring users, because I think we want to build a product that has sustainability, and we want to make sure that whatever we do can result in conversion into the fundamentals and also get more people to be aware of our narrative.
All right, I like that. That's, I think, quite a good strategy. But coming back to the tokenomics, I see on your website on DAX that weekly emission as of October 2023 is 667,000 tokens. So it decreased 1% each week. But now when we take this, it's almost like 800,000 every month. In terms of dollars of your token, that is sent to the market. So what do you think? Isn't it a little bit too big? It can like cause some supply too big supply release on the market.
So this is, yes, I mean, like thank you for pointing this out. Now, so actually what's happened is that the token gets released, but they're not 100% utilized. So for example, right, the contract releases 100 tokens a week, but we have the optionality to reduce the like maybe we don't have to fully utilize that 100 tokens every week. We can utilize 50 or 60 depending on the state of the market. So at a team level, we do have the flexibility to decide on the amount of tokens we want to use, as long as it fits in the like weekly emission budget. So yes, if we utilize the full 100% of it, then I think we are probably looking at a pretty big sell pressure of the token. But lately, we've been also quite conservative with our releases so that we can save up the emission for subsequent launches or more strategic engagement with other communities, for example.
Okay, so you are on the market for like 2 years. Is that correct?
Yes, that is correct.
So what changed from your first vision about this project, and why you changed something that you started to build there then?
Yeah, sure. So there are actually three major aspects that we have changed and improved, because when we launched a product, it was the first iteration. And as much as I think we've done a good job with the product, the most common feedback that we've gotten was that the product was difficult and it was so hard to understand. And we needed to do something differently. So we went back to the whiteboard and we redesigned the protocol. So there are actually three levels of differences. One, we have a better AMM, a more efficient way. So capital efficiency is improved. And not just that, right? The liquidity concentration also happens on Pendle, because previously in V1, YT and PT are traded on two different venues. But with the implementation of V2, YT and PT are actually trading against the same pool. So this is a very significant improvement, and that means liquidity providers will get to benefit from YT and PT trades, and which is quite different from before. Secondly, the other thing that I'm also very excited about is the permissionless nature of the protocol. And what this means is that we can allow for protocols or developers to list their assets on Pendle and establish yield markets permissionlessly without having to consult the team. And from a scaling standpoint, this is where I feel most strongly about, because I think we've seen how things worked out with Uniswap. You can set up a pool on Uniswap without having to consult the team. And this is actually quite important because it corresponds to the ethos of crypto. And it is a very important step to take from a scaling standpoint, in my opinion. And thirdly, we've introduced simple UI and pro UI to cater to a wider range of audience. Again, because one of the most consistent feedback that we've gotten from V1 implementation is just the complexity of the product. And if we want to get more user adoption, we needed to do something about our UX, and we needed to make it simpler for people with or without the derivative knowledge to interact with our protocol. So today, if you go to the simple UI, it's actually a lot simpler, and you don't actually have to have derivative knowledge to interact with the protocol. We display the way the opportunities in the form of buying asset at a discount, or just provide liquidity to the pools, hold it until expiry to potentially gain from the published APY with no impermanent loss. So these are the simple messaging that we're looking to deliver through the simple UI. And as of today, more than half of all the transactions that we've seen on Pendle protocol happens through the simple UI. So I think that's a pretty good move that we've undertaken.
Yeah, that's really nice. Now it looks quite okay. Honestly, I haven't seen your platform last year or 2 years ago. I just find out about you a few months ago, but it's quite impressive what you are doing. And do you think that you have some kind of competition? Is some other project try to do the same thing, or maybe something similar?
I think in terms of competition, we recognize that there are some other products that are operating in the same sector, and there are teams that we respect and we think that they would do a good job and keep us going. But I think the more important focus for us right now as a sector is to grow the share of the market, because I think the fixed rate sector is still very small in the grand scheme of things. So I don't think it makes a lot of sense to worry about competitors at this stage, because I don't think we have a very strong product market fit at the moment. What I would be more particular about is to grow the awareness for fixed rates in DeFi. And if it means to work with other protocols to achieve that objective, then like we're certainly open to consider.
You said on the beginning of your talk about few projects now. So what project do you have in mind that are interesting and team are doing good job?
Yeah, so in terms of the teams that we respect, some of the ones that we work with would be, like Aura, and then Balancer and Rocket Pool, Lido, definitely. Yeah, GMX, GLP, all these teams that we've worked with, we have a lot of respect for them because we've seen just how well they've done. And then in the fixed rate sector, we also have very high regards for notional finance. We think what they're doing is very interesting and definitely a very strong team that is behind the protocol.
Okay. So what's next is coming to the platform. We know, everyone knows that you're gonna list some new assets, so that's for sure, but is there any changes that you wanna implement, maybe new chains in the future also? Because you just recently went to Arbitrum, but do you plan to expand maybe, I don't know, Optimism, Polygon or something like that?
So at this stage, I think we are definitely on the lookout for more opportunities beyond just Arbitrum and Ethereum. But we haven't set our sight on any one of the chains. So we are, I mean, just very broadly speaking, we're looking at Polygon, Optimism, BNB chain, and a couple of others. Exactly when we want to pull the trigger to exercise the expansion plan, that is still a question that we don't have an answer to. Now, in regards to the high level overview of the product roadmap, we definitely want to achieve a couple of things. Number one is we want to continue to increase adoption of the protocol, and that could mean we reduce the barriers for participation, making it easier for users to use our product. Because right now, even though we publish simple UI and simple UI abstracts away the derivative components, some people still find it rather difficult to navigate around the UI. So perhaps we can have other interfaces like a vault strategy to onboard new liquidity onto the protocol and contribute to the trading volume at the same time. And then potentially looking into making the permissionless listing even more seamless for users, because I personally am very excited about permissionless listing, and I think this is a very important part of crypto, like just allowing people to set up pools permissionlessly the way they do it on Uniswap and Trader Joe, SushiSwap. That's very important. We should be able to have a new interface to enable these feature and ability quite soon, and depending on the appetite, we might be able to prioritize this over the others. So yeah, high level, these are just some ideas that we're thinking of, and we definitely need to review the whiteboard and see what we prioritize.
All right. So now there's gonna be like usual question, because you are not on a text. So when text, and do you have some plans for it, or don't even think about it? You just like happy with listing on dexes?
No, so listing on dexes is the start, but over time we definitely want to have more presence on centralized exchanges, because I think from a user standpoint, it probably makes more sense to obtain the asset on centralized exchange, especially for those who are not users of the platform and who and might not be familiar with how products like wallets work. So and I think having presence on centralized exchanges can also improve our visibility as well. So that's also an area that we're currently working on. But of course, the listing of asset on centralized exchanges is typically beyond the control of the team, because we don't have a lot of say in how the team, the centralized exchange, decides on the listing date and just the types of asset that they list. What we'll do is continue to push for better presence within our community and across the social media outlets, and hopefully with more support from community members, we get endorsements of sorts, and the exchange recognize it and list our asset.
Yes, but isn't it like that projects are giving some tokens for the centralized exchanges to provide liquidity? So I think that you need to be aware. Projects that are doing something like that are aware if there is something coming up and if they're gonna be listed in the near future.
So that really depends on the exchange, because I guess like for big exchanges, the tier 0, tier 1, tier 2, typically they don't ask too much about the liquidity provision because they have the clout and they have the user base, and they work with a number of market makers to ensure sufficient liquidity on the platform. And I think that the ones that are asking for liquidity are usually the slightly smaller exchanges. And at this stage, I'd like for us to think and aim for tier 2 onwards, right? Tier 2, tier 1, and tier 0 exchanges. So a lot of times I think they have stricter evaluation criteria. And yeah, hopefully with the recent traction we're seeing, we get considered.
Okay, gotcha. So maybe the last question, because it's almost 1 hour that we are talking. So if someone from the audience wanna join us and maybe ask question, now is this right time to do it. So don't hesitate to click that button. And I wanna ask you, what are the biggest risks to the protocol?
I think the biggest risk to the protocol is that we become complacent and we stop improving. Right. I mean, take aside all the smart contract risks and the second order derivative risk exposure. I think this is something that I feel a lot more strongly about, because I think we're not there yet. And even if we are, I don't want us as a team to be complacent and stop innovating. And this is actually a very hard thing to manage, because there could be a lot of distractions. Hopefully we become big, but we need to stay focused, and yeah, this is just something that we need to be mindful of.
So maybe something like a question like that. So what is your goal for example, for the end of the year? Do you wanna maybe at least a lot more assets, or you wanna grow TVL to some amount? So what's your goal in the team?
So ultimately, I hope we could achieve $2 million in trading volume over a period of 30 days. Right now we are over $1 million in the past week or so, but if we average it out, it's still less than $1 million. Hopefully by the end of this year, we can stretch it out, double it, and have it consistently more than $2 million over a monthly basis.
Okay, so it's all about the volume. All right, so is there something that you want to highlight that I haven't asked you about and it's really important to talk?
I actually think you asked like really, really good questions that allowed me to expand our perspectives and our thoughts. So I really appreciate the questions you've asked. In terms of highlights, yes, I would encourage community members over here to check out our protocol and look out for yield opportunities on our protocol, either as liquidity provider or traders on the YT or PT markets. there are in my opinion, still quite a lot of opportunities. And I think especially if you are looking for fixed rates, Pendle is arguably the best venue in DeFi to lock in the fixed rates. Yeah, I'll leave it as that. But I really sincerely hope community members over here check out our product.
Okay, but I will come back really quickly, maybe to VE Pendle. So there is like 2 years maximum stake duration. So after these 2 years, what will happen with our VE Pendle? Does it switch to Pendle, or what's going on there after that?
Yeah, after the lockup duration is fully observed, you can withdraw the Pendle from the contract. Yeah. And if you want to, you can lock it up again and extend the VE duration.
Okay, so we can do something like that. And no, all right, now it's gonna be a last more question. And I think it's gonna be a little bit more difficult. Why do you think that investing in Pendle token in your protocol is good choice?
Wow, this is really quite difficult. I am naturally biased in whatever we're doing, but I'm also very hopeful and convicted in the direction that we're building. I think investing in us makes sense because we are working in a direction that I very firmly believe in. And what is that? So we started out Pendle because we have a lot of faith in the role of fixed rate products in a financial market. And right now, fixed rate is still a growing sector within the broader DeFi ecosystem. So my belief is that over time, the role of fixed rate in like DeFi will continue to improve. And I think we will have an increase and like we will continue to increase our presence in the sector. So if we grow the way the financial sector is supposed to grow, then I think we will see decent traction on the protocol.
Okay, that's a really interesting answer. So that's all from my side. So we like your protocol here in this community, and I think that you're doing something really important for the industry because this is something new, something that that brings us to another level of DeFi. So wish you all the best. I think that you will get your goals and you will expand on this market a lot. So yeah, that's thank you for being with us, for sharing your thoughts, and for this 1 hour of a really nice conversation.
Thank you so much for having me, and really appreciate the support from our friends over here. Yeah.
All right, so I hope we can catch up in a few months, and maybe you will get us some updates about the project.
Oh, definitely. Yeah, we'll catch up again.
Sure. So have a nice day, and thanks.